It is the 11th day of October, 2013, and these are the market truths. The S&P 500 is 1693.69, 11:08 Eastern Time. Yesterday, we did see the formation of a morning star pattern, the opposite of an evening star pattern. These trend lines go all the way to 2011. There's nothing in here about news. They were drawn in 2011, snapped to grid. This is a daily chart. Each candle represents 1 day. 1 day. Not much news in here. Each candle is 100% accurate because it represents price. And that's what buyers and sellers go by. Price. If they went by news, we'd have something in our trading window besides a bid and ask. We would need a premium credit, a news premium credit. Perhaps we find something in the options market. Does not matter. So the Morningstar pattern right here found support on the bottom of this channel from 2011 as it did here with the Morningstar pattern. Doji, 3 candles to form it. This is our third candle. This is today. Will it pierce 50% of this candle? If so, we can probably cancel this. This will not be in effect. Time will tell. More information is needed. Right now it looks pretty good. It looks like we're off to the races and maybe find the upper part of the channel because we have support of the 20 and the 50-day exponential moving averages. So 50% is about here, a 1679.23, if that were to take place. But it would have to fall through the 20. It's not even getting close to the 20. All right, so enough of that. The big story, H-band. Remember we talked about H-band? Remember we traded H-band when it fell down to support? It fell to support right here. And we thought that was pretty good because it had the 8 and 20 day. Actually, we purchased over here. We purchased over here. And then we held it. I was lamenting because, check the older videos. I got out at around 862. It went to 871. That was my original out order, 871, and went for a high of 873. So you would have got filled at your 71 order. Now, still a good buy. We want a parabolic buy. Stochastics crossed over to positive. RSI at 52. Good sign. MACD barely turning up. I would like this better, obviously, if it went up a little bit more. It does have a Morningstar pattern here, but there is a gap. So I do have an order in a GTC to 815 around the gap area. So it can come and then do a back test. And I'm a buyer on the back test. Right now, it's just, where's it going to go? It's like sending a motorboat off the dock. How far out is it going to go before it retests the shoreline? That's a horrible analogy, but you get the point, I think. ExxonMobil. ExxonMobil has a different story going on here. It went on a parabolic buy. It does have the crossover, the stochastics, because it was embedded and it was oversold. RSI at 45, and we didn't go positive on the MACD. But here's the big story: is right here is the 50 and 200 EMA crossover. That's called a death cross. When it crosses above the 200, it is a golden cross. This may take a month to play out. It does have support, yes, today of the 8-day EMA. See the support right there? And a shadow low. No sellers down here. And it is a green day. Got a shadow high already. Resistance at the 20, resistance at the 50, resistance at the 200. If it gets there, these are the MA stacked against ExxonMobil, but it does have the 8-day. It does own most of the world, and most businesses are petroleum-based something or another. So we shall know more on Monday. And